How did you get into financial consulting?
The Department of Labor statistics indicate it's one of the fastest growing professions.
Okay. I like the balance of it. Plus, my dad was an accountant. You know, he had the whole shtick. The, like, dorky pocket protector and...
I have a pocket protector.
What's your last name? Rubenfeld. All right, so you may not need an accountant.
Welcome back to Not Another Accounting Podcast, NAP for short, because it's the only accounting podcast that won't put you right to sleep. I'm your host, Hamza Hetner. With me, as always, Jesse Rubenfeld, our founder, CEO, and my boss. Jesse, what's up? What's going on?
Welcome back, Tom.
Thank you. Episode 32, we're rocking and rolling.
Oh, yeah.
Many people are saying we're podcast gurus at this point, although I have heard that using the word guru can be a bit of a slur in the guru community. Have you heard that?
I have, and I'm not concerned.
Yeah, me neither. I feel like it's not a bad word. I guess there's just a lot of phonies out there saying they're gurus and they're not. We are certainly not gurus, but we are gurus. I don't know if we can say it or not, but we have 3 good segments today. One segment, really, really, really good segment, practical expedience and materiality. Those words probably sound a little bit
saying
boring.
that because it's your segment.
It is my, yeah.
Is that the really good segment? My segment's good.
Your segment's good, but they're both good segments. They're both good. Well, my other segment's going to be really good too.
Okay.
I think my first, yeah.
When we find out what
let
it
the
is,
audience
we
vote.
can
We'll let the
reevaluate. Okay.
All right.
Fine.
Practical expedience and materiality, really common sense accounting for startups, right? Don't overcomplicate it. Keep it simple. We're going to dive into that. It's a really, really important topic for all of the startups out there and also for the accounting firms doing work for them. But as always, we also have 2 secret segments. Jesse and I like to keep each other on our toes. We don't like to talk about what the segments are going to be beforehand, and we'll each reveal them now. So Jesse, last week, I asked you, what would you do if we sold Finoptimal for $1 billion? And you very rudely didn't ask me what I would do with my portion of that. So I actually want to pitch you a couple ideas, especially you're going to have much more than me. So I want to see if you would invest in any of my ideas. So that's going to be my segment. We'll start with that.
Can I just say no now, or do I have to hear the ideas?
Fine, dude. You want to walk away from that? You're the worst Shark Tank panel ever, dude. You're like
Okay.
Guppy Tank.
Okay.
All right, what's your segment?
I'm all
What's your
ears.
segment?
My segment is Moneyball / playing to your strengths.
Okay, I love Moneyball.
Yeah, good.
Great movie. Did you pick that because Brad Pitt's so handsome, or?
No, I picked it for the concept. He is handsome.
He is
That's
handsome.
not why I picked it.
Yeah.
Yes.
Yeah, I love Jonah Hill too, although if that gets me in trouble these days, I'd strike that from the record.
Almost anything can get you in trouble. You just gotta. I mean, we
Wait
should have a
till you hear
podcast where
these-
we just say
wait till you hear
nothing.
these business pitches, then we'll see who's really good.
Oh, boy.
I might
Here
get
we
in
go.
trouble here. All right, so again, last episode 31, where we hit 10,000 subscribers for the first time because
Oh, awesome. Yeah, and now we're at an episode that itself is a power of 2 and has a ton of factors, which I love. 2 to the 7th.
Only
Just kidding.
you.
That was a joke.
Only you
Everyone
can-
knows it's 2 to the 4th. Just kidding. Let's start over.
No, all right, let's keep it rolling. All right, so Jesse, I'm going to pitch you 3 ideas.
Okay.
I just really what I need from you is a hard I'm in, a maybe, or a no way. As an option, you can also fire me on the spot for having dumb ideas, but I implore you not to do that.
But we can't have like the buzzer X mark strikes like in America's Got Talent.
Yeah, you could do that. You just do it with
Okay.
your mouth and with your
Like
arms. That'll do. Yeah.
Okay.
That'll be really good for all the audio only listeners to see. You
And
do
then
that with your arms.
and then we can skip. I'll make it a sound effect too, like. Eh.
Yeah. Or people will think you're doing Wakanda forever, but all right. Well, all right. Here's my first one. This is so the business concepts I'm using here are cross-selling and price gouging, 2 really good business strategies that they taught me in business school. All right. So the idea is in a strip mall, we buy or we rent 2 spaces right next to each other, right?
2 spaces.
First one is a barber shop where we give free haircuts. Okay. And next door we have a hat store, and you give really, really bad haircuts.
And then afterwards,
but the prices for the hats are 5x what they normally be. So you recoup all the money you lost on the free haircut. You give a bad free haircut, they have to go buy a hat. Like they're going to be, oh my God, the mirror, they see how ugly they look. They go buy a hat.
Oh man.
In or you out?
I'm in. I
You're
love
in?
it. I think it's brilliant.
I love it.
Because when people are in need, they'll pay any price. I mean,
Exactly.
cut half their hair
I
off,
would
leave the other half on. You could sell half a hat, and that could be a story too. But
I mean, yeah, I went to I honestly went to get a haircut one time at a cheap haircut place, and it was so bad that I looked around and said, God, I need to buy a hat right now. I don't have one. And that's how all great ideas are born, folks. Go get a bad haircut. Some people think they get shower ideas. Oh, I get a shower thought. No, you get bad haircut thoughts. That's how you're really going to figure this out. All right, let me pitch you another one.
Tom, I don't think I'm paying you enough. Tell me more.
This is on the record, folks. All right, here's another one. I'm going to call this people, you bundle, right? Bundling is like a sales strategy.
Of course, totally.
This is called reverse bundling. Okay. So instead of packaging 4 things together to sell it to one person, we're taking one thing and actually selling it to 4 people. There may be a more technical term, but I haven't read anything in a very long time. So, all right, we're going to open
reverse bundling. Okay.
Yeah. So it's a nonprofit. Okay. But it's disguised as a hip influencer restaurant. All right.
Not what it seems. Okay.
Exactly. So we make it super exclusive. So all these people that are like clout chasers on Instagram, they're going to come and they're going to go, oh, I want to take a picture of the food. Is very, very photogenic. Right. And it looks really nice. And they can put it on their Instagram and go, look how cool I am. Look how much money I have. Right.
Yeah. People love to
we
do
bring
that.
them the food. They do. People love to do that.
Yeah.
So what we do, right? They don't get
I
to
saw
eat the food.
at PyCon one year. I saw the Instagram CEO, or maybe it was the CTO. He got up and he introduced it as like, oh yeah, we're the brunch picture company. I mean,
there
Instagram.
You go. Exactly. Yeah. If you're paying attention,
I think it was before Facebook bought them.
Guy knows his company. Yeah. So the food comes.
Sorry to interrupt.
No.
It sounded like a really great idea.
Sounds like you're already in.
Yeah.
All right. So the food comes and you don't get to eat it, right? You just get to take a picture of it. And you pass that same plate to everybody in the restaurant. So nobody's actually eating. They all take a picture and they go, look at me, look at me. And then we have people in need that you donate the food to, right? So, hey, you're doing good, right? And that's how we're a nonprofit. But you also get a receipt that says, I gave my food to a person in need. So you get to get double the clout. Not only are you rich and get to eat real expensive looking food, but you also get to do a good deed and then brag about it online.
Do they pay? Wait, I need clarify. I have clarifying questions.
Everybody pays full price for the plate, even though none of them get to eat the food.
They all pay full price for the same plate that's passed around. Oh, that's
reverse
great.
bundling, Jesse.
Economies of scale.
Economies of scale. That's the word. Yeah, that's embarrassing that I didn't know that. All right, so you're in or you out?
Yeah, I was going to say, maybe don't mention your specific business school that taught you all this stuff, just in case they don't find your ideas as compelling as I do.
Yeah.
But I love it. I'm in.
You're in on
both of them. Yeah. If we have $1 billion.
I don't know if I should even pitch you my third one, but I'm going to anyway, because I can't help myself. All right, this is my last one.
Come on, man. Yeah.
Arbitrage. I'm calling this arbitrage and arbitrage. Everybody loves to say that.
Arb
Arbing.
For short.
Yeah, I know. Yeah.
Arbing.
All the cool kids say arb.
Yeah.
All right. Here's the prompt. Ready? I'm going to go back into pitch mode.
Okay. Game face.
All right. So nothing is more annoying than hearing other people on Zoom calls. Agree or disagree?
Totally agree. Especially when you can't hear their audio that they're hearing and you only hear their side of it. Yeah.
Exactly. Squatting, squatters' rights is a very difficult thing for people to navigate these days, right? It's very hard. If people move into your house, they squat. You can't get them out.
You can't get them out.
Fast enough.
Totally.
Okay, so
who hasn't dealt with squatters? Everyone's had to deal with this.
I haven't, because you're not paying me enough to own anything, but we'll circle it back offline. All right, so here's the idea. Ready? The person who owns the home pays startups to actually just go squat in the same place that there are squatters. And then they take Zoom calls all day. They annoy the crap out of all of the squatters, and the squatters leave. So it's an alternative cash flow for co-working spaces, right? Yes. And the homeowner benefits. So you get a free place to work, not only a free place, but you get paid to work there, and you're helping somebody.
They include the Zoom subscription in
fundraising market is tough right now. These businesses need an alternative cash flow, right? How are you going to make
customers to fund your absolutely.
Yeah, if you need to get to your A round, right? Here's $10,000. Go take Zoom calls all day in a house with a bunch of squatters and get them out. Which is the
you know
best?
what? Now that I'm thinking $1 billion might not be enough to fund
A
because
billion?
I want all three. I want to be in all three.
This is it, folks.
So
If you have really, really good, like these are really good ideas, all you have to do is join a company, work there for about a year, convince your boss to do a podcast, and then convince him that you're getting to do a segment, and then you pitch him on your ideas, and he says
Yeah.
yes, and it's recorded. So I have verbal commitments now. I'm a 3 times funded founder at this point in 15 minutes.
wow, way to go.
You can't teach this in business
instructive.
school.
You can't.
All right. Well,
literally no one does.
so for the 3 people that are still
I didn't
listening,
entirely understand what the arbitrage angle was there. Like we
I
called
just
that
said the
arbi-
word because I know if you say
Okay.
arbitrage, people get
Okay.
interested.
That
You know?
sounds like an underwear gnome kind of concept. but,
Exactly.
okay.
Yeah.
All right.
All right. So for the 3 people that are still listening and the 9,997 that dropped off, we're going to talk about common sense accounting for startups. Everything I just said had no common sense. This will have common sense. That was an expert
So I
transition
just
right
I
there, by the
invested
way.
in 3 bad ideas. Is that what you're telling me?
Yeah, give or take.
It's a lot of whiplash transferring from like the serious to the I took that seriously.
Oh, I
Now
appreciate that.
I'm in
Yeah.
front of a bunch of people liking those ideas.
I've been given feedback that
I mean, you said it wasn't that many
set up
people.
good
So
I set up good ideas for failure so that I don't get hurt,
okay.
something that I'm
Okay.
working through, right? You kind of
Okay.
neg yourself on purpose so that no one
Yeah.
can say, oh, I didn't really try.
Yeah.
So if they go,
So-
that
yeah.
stinks, it's like, oh, well, I
Yeah,
wasn't
it was
trying.
a joke. It was a joke.
was a joke.
The joke's on you, not on me.
Yeah. Now everybody
Okay.
knows how this podcast got made. All right.
It's okay. There's only 3 people left. So
yeah, if that. All right, let's seriously talk about this though. Practical expedience. So I'll give some technical definitions before we get into it. Practical expedient is essentially a rule that you can elect to simplify your accounting without sacrificing, the reasonableness of the numbers that you're reporting. Basically, don't overcomplicate it for the sake of overcomplicating it. And this is a real, practical expedience are a thing that public companies elect to do, right? Elect to use in their own accounting. And then materiality is another concept that we're going to cover. So materiality basically means, hey, in the grand scheme of things, does this amount really matter, right? So if you're a business that's got $1 million worth of revenue, $100,000 is definitely material. If you're a business that has billions of dollars worth of revenue, $100,000 might not be material. We're going to cover both of them. But Jesse, when you talk to startups, when you talk to our clients or other accounting firms, how do you see them thinking about this? Because from my perspective, I often hear people, they hear the word GAAP or they hear the word compliance or audit, and their initial reaction is, I'm going to get in trouble. I need to do everything to the letter of the law. Even though I have to overpay for accounting, like I need to do it because I don't want to get in trouble. You're a startup founder. You do our books with the help of some people on our team, and we work with people all the time. How do you think about this? And like, what advice would you give to startups that are thinking about how to go about their accounting process and set up their accounting policies?
it's a big issue. I think the first thing to say here is that unless you're in a very highly regulated industry or growing super fast and raising money from banks or investors that are more scrutinizing than your average VC, you're not doing an audit. Let's just say that right now. You need to keep GAAP financials to the extent that you can, but there's always a practicality constraint that's important to keep in mind. I think the idea of satisficing is a good one here. Right? You generally want to try to have your financial statements reflect the economic value, the economic activity on your balance sheet, the value on your P&L, the activity that's happening, right? Can I figure this out as an investor, as a reasonable person looking at your company from arm's length, just at the financials and asking some questions? Can I figure out what's going on? And I think that that's a better gate than following, ASC 606 to the letter.
Yep.
Because sometimes it's not practical.
Right.
And the difference between practical and perfect could be tens of thousands of dollars in expense,
right,
and tons of your time that you'd rather spend growing your business.
100%. I think some of the common practical expedients that like I'll see businesses elect, especially when you're a seed series or even Series A, Series B, right? You definitely want to be thinking about these things. I can't tell you the amount of people that are like, I'm going to pay a consultant to go over all of my contracts and make sure that they're 606 compliant. Like you have $3 million worth of revenue. Don't do that. Right. So here's some common practical expedients. Like one would be, low value asset write-off or just expensing low value assets like a laptop. Sometimes people will capitalize a laptop, right? But you don't always have to, even though it does have a longer useful life than say, your office supplies. It may not make sense to track the depreciation of every single laptop if you're a 20-person company, right? Another would be, not capitalizing R&D costs necessarily, right? Are you going to be tracking the specific amount of time that your development team is spending developing new features? Or are you going to do a calculation to strip out any of the maintenance or the meetings to get to that real number that you're allowed to capitalize? Do you just expense it all, right? Or one that we always come across because of the accruer, right, is revenue, is straight lining. Obviously, there's a question of if there's different performance obligations in accordance with 606, can I really straight line these assets? And at the end of the day, I think it comes down to, okay, if you did follow 606 to the letter of the law, what would your monthly, quarterly, and annual revenue be like for the majority of your contracts? Now do the same exercise, but straight line them. Is it materially different? If it's not, you don't have to spend the time reviewing every single contract and doing a more complex revenue recognition process, right? If you don't have enough revenue for it to even matter, right? If the difference is a few $1,000s a month and you have millions of dollars of revenue a year, just straight line it. It doesn't make sense to overcomplicate it. Jesse, when you think about materiality, like what guidance would you give somebody to kind of figure out, is this material? Obviously talk to your auditor, obviously talk to, your VP of finance, but what advice, if any, would you give to people when they're thinking about materiality? Like, how do you even determine what is or isn't materiality for your business?
I mean, I try to go with my gut, but if I had to, the rule of thumb would be if I'm sitting in front of the CEO and I'm talking about the financials and I start getting into the intricacies of whatever it is I thought was worth spending a ton of time to nail down perfectly, are they shooing me out or are they saying, oh, tell me more about that?
Fair.
Right? What's most important to your business? Spend your time anticipating the questions the CEO is going to ask you, or the CFO, or whoever the stakeholders are that are connecting the company's strategy to your work, and focus on that.
That's such an interesting and qualitative way to kind of frame materiality. If your explanation of your accounting policy is going to put your CEO to sleep or get you kicked out of the room, it's too complicated.
If they're going to say something like, can you get me someone who speaks English for God's sake?
Yeah.
Then maybe just make the approximation, take the shortcut.
Yeah.
Look, you can be taken to the opposite extreme too. We see people that just, okay, great, cash, everything cash.
Oh, 100%. Yeah, you cannot do that, right? But we see businesses that are primarily a software business, but say as part of buying their software, they'll also get you an iPad, right? Software is 95% of their revenue. They sell iPads. That's maybe 5% of their revenue. They have maybe 100 iPads sitting around at a time. They're not doing an inventory count of their iPads, right? That makes sense.
I don't know. 100 inventory, 100 iPads is like $100,000.
No,
so depending on their size.
Damn, I gotta get a new iPad. I thought they were like a couple $100.
I mean,
I don't know anything, dude. I'm just giving out.
An expensive iPad is $2,000 for sure. Yeah.
Really? Is that like that must be the iPad gouging store? That's not.
Listen, maybe your three businesses are the wrong business and you should rethink it. But look, you may not know this, but we capitalize our laptops. We don't have a ton of them.
Why?
But the accruer makes it easy, right?
Yeah.
If it's easy and therefore practical, right? Like we don't have to do any work to depreciate it. It hits this particular account, computers. And then automatically each asset's getting depreciated automatically. Look, we're doing it over 3 years. We do have a threshold of, I don't know, $1,500 or something like that.
Yep.
But if it's easy, why not? Sure, do it by the book. Accruer gives you a nice schedule. You can see what's in, accumulated depreciation, net book value at the end of the month. But okay, if you're going to start to get into more nuances and you want to use very specific methods, and I want one for tax and one for alt-min, and now you've got to use like specialized software to do like multiple depreciation methods at once. All right, I'm asking the question, is this really worth it? Your tax accountant's going to do his own depreciation calculation anyway.
Yep.
Should you spend any time on this? Probably not.
you threw out one thing, and I'll just close the segment with this: the threshold concept, right? Um, this comes back to, again, conversations I have with businesses who are talking to other accounting firms, trying to figure out who's the right fit. They'll say, can you write all of my accounting policies for me? And again, I'm like, hey, you guys have a few $1,000,000 of revenue. Don't worry about having this grandiose accounting policy that covers every detail. But, write down the rules that you're following, also just to train the rest of your team when you eventually hire them. But you can set a threshold, exactly like you mentioned. Hey, even if it could, in theory, be a fixed asset, if it's under $1,000, I'm just going to expense it. Or, hey, I straight line every contract, but if the contract is over a certain dollar value, then I'll do a 606, step-by-step analysis of how I actually should recognize revenue. It's okay to make those assumptions and proclamations, because especially when an auditor comes in, they're going to go, how are you making these decisions? Oh, that's what you're doing. Okay, that makes sense for the most part. Maybe they'll give you advice to change it in the future, but at least they can follow it, right? And you're almost telling on yourself, and you're not even doing anything wrong in the first place. So don't
I mean, I
Martha
think,
Stewart yourself and lie and then get in trouble for lying when you weren't actually doing something wrong in the first place. That's
oh,
how she got in
wow.
trouble. That's
There's
how she got in
Tom
trouble.
throwing some shade. Tom
No, I
throwing
love
shade.
Martha Stewart.
Look, there's an over, like, sometimes when clients ask us to do something that's going to involve a lot more complexity and ultimately is going to drive their costs up, because we're going to have to ask them more things or go back to them more frequently or even write custom code to accommodate the request, I try to say, what are you hoping to gain with this complication?
Yep.
Is the juice worth the squeeze? And half the time they say, no, you know what? I'm not even going to look at that. I am the CEO and I'm not going to look at that.
Yep.
So then great, let's not code it in. Don't paint yourself into a corner, a process corner where you have to add all this detail to every transaction you book to support a view you're never going to look at.
Good stuff. I love it. We'll also be attaching, with, as we do with all our episodes, a blog that kind of covers this and gives a little bit more guidance. So definitely check that out. But talking about common sense for money, let's talk about
I don't know if
Moneyball.
we should post the business ideas, because that's like,
No, that
they
is not
listen
going
great,
anywhere.
but okay.
Oh, I forgot to tell you that everyone that listens is signing a verbal
Gone.
NDA through their.
Okay.
No, they've all, by clicking play, you've agreed to not steal my ideas.
Okay,
I haven't
right.
run that one past the lawyer yet, but that's
Okay, if
another
I see
idea
a
for you.
barber shop next to a hat store,
You'll
I'm
know.
going to raise an eyebrow.
You'll know. All right, let's
Okay.
talk about Moneyball quick because we're coming up on time here.
Okay.
Moneyball, great movie,
Moneyball. Great
but
movie.
I
Great book.
great
Based on a
book.
great book by a great author.
I really really like this topic. I'm really glad that you brought it up. And when we talk about Moneyball here, if people haven't seen the movie, it's a story about the Oakland A's. It's a true story. They're a team that didn't have as much money as all the other teams in the league, and they kind of went through this process of just trying to get expensive players, and they would leave for bigger market teams like the Yankees, and it was kind of this question of what are we going to do? How do we compete against the big guy? And they came up with this concept to basically figure out how to use people to their strengths, right? You may not have the fastest guy, you may not have the strongest guy, but if you can find people's strengths, you can build a team. And that team ended up making the playoffs that year. So, Jesse, when you think about that concept in terms of like our hiring strategy and just the hiring strategies that you see our clients and other accounting firms taking, how do you think about it? How do you think about using people to their strengths?
I think it's maybe the single biggest challenge when you want to become a leader. When I went full time with Finoptimal and started hiring people, raising money, learning how to hire and how to fit people in where they belong, where they want to go, where they're going to flourish and bring their best to the company every day. Hiring to fit one particular profile. I want superstars from Ivy League school, this and that. I mean, that's not necessarily a winning strategy if you're resource constrained, or even if you want a diverse population with different strengths.
Yep.
Playing to your strengths is much better than getting a bunch of people, let's say, that are going to conflict because they're all the same. So I try to hire fast, figure out how people are going to, what people are going to bring to the table that wasn't clear from their resume or how they interviewed. Oh, this person's good. Didn't expect that. Oh, you were going to become an accountant. Now you want to become a coder. all right, let's see if we can make that work. If that's what you want, I want to
Right.
try to benefit from you benefiting. That's much better than, well, that's not what we're looking for. We're looking for a very specific profile. We thought you were that and you're not, so this isn't going to work out.
Right. It's a classic square peg in a round hole. There's all the, if you ask a fish to climb a tree, you'll see it fail, right? All of those different kind of, sayings. But I do think it's important because when you're a startup, you don't have access to all of the capital in the world. And there's so many different opportunities these days.
And more importantly, like no one's heard of you. It's like the best and the brightest, so to speak, that are coming out, like the top percentage of their class, and they're not looking for you. They're looking for the big four. They're looking for, unicorn startups. They're looking for, prestige and money. Yep. Not that we can't offer money, but yeah, your pool is limited.
It's important to, like, you want people to be excited about their job, right? And about work, so that their job is a career. It's not just a job, where it's a passion, something that they, go home and work on at night or work on the weekend, just because they literally love it, or just completing it fulfills them. But the truth is, it's easier said than done to say people should be excited about what they do at work. And I think it's important as a leader to help people figure it out, right? To whether that's, throwing different things in front of them, letting them try and fail at different things. Because the amount of times I've asked to direct reports, what do you want to do? And I just get a blank, I don't know, like, I'll do anything, right? Like, that's just, to me, it's a little bit defeated, right? And it's, I think, the leader's job or the manager's job to continue to put them in different positions to say, okay, like, you don't know if you should be a first baseman or a shortstop, but I'll let you do all the different practice and see where I think you're showing, the real potential, and then put you in that. Even if you're going to be uncomfortable, I'm going to put you in that position, and I'm going to encourage you to try and fail, because that's how you're going to grow as a person, right? So, it's not just, I need to have the best and brightest all of the time, or the person with the most technical skills. I don't want to steal your line here, but it's about hiring for heart, right?
Yeah. Yeah. Look for the heart. And when I say heart, I'm thinking about drive and willingness to work hard.
Yeah.
And most of growth, the company growth and the individual growth, comes from just working hard. All right, you don't know what you want to do? Here's some work. Do it quickly, do it well, treat it with a sense of urgency. And that's the most valuable thing that I can ask for, particularly somebody at the closer to the beginning of their career, which is most of a startup's roster typically. Yep. And at some level, people, I think another sort of guiding thought here is not to try to change people. They are who they are. Maybe people can change, but you can't change people necessarily, right? So people, wind themselves up, and they march in the direction that they're walking. And your job as a leader is to try to get them walking in the same direction, or put people in seats that when they wind themselves up, when you wind them up by trying to inspire them at an all hands meeting with a podcast, such as it is, right? That they're going to be wound up and bring you their best, which is to say, walk in a direction that comes together for something better. That's how I see my challenge as a leader. It's not about writing better accounting code or, delivering audit perfect books.
Yeah. I think I apply that in my regular life too. Don't expect somebody to be who they're not, and you're not going to be disappointed, right? Know who everyone is and what they do. If they change, great, but don't expect it. So cool. That was a great insight.
I'm not saying you're not a superstar, but even if you weren't a superstar, I think there'd still be stuff for you to do.
There's still a place for me here. Thanks. Yeah.
If you even if you
an ideas guy, that's
subjunctive case. Yeah. Okay.
Oh, thank you. I love ending the show with compliments. All right, so I think we had a good show. 3 genius business ideas. Now everybody knows how smart I am and how good my ideas are. Yeah. Really good convo about practical expedience, materiality, common sense accounting. Again, check out the blog that's going to be attached to this podcast on our website, finoptimal.com. It's really important that, as much as we joke around, you guys actually get something out of this. And I think that was a good convo, because there's too many people out there struggling with that. And then finally, Moneyball. Think about putting people in the right position. That's how you're going to be successful when you can't go against the big guys just yet. Jesse, great episode 32. Like I said, we're rocking and rolling. Any closing thoughts for the audience?
Yeah, like I said, 2 to the 5th is a great number for an episode. Stay tuned for next time, because the next episode is a palindromic integer.
Yeah, Jesse
So
doesn't
don't
know
miss
that I'm
it.
changing the episodes. We're gonna start doing letters and numbers next time. Really throw him off his game.
Fine,
here.
make it a palindrome. Make it double A. Then it'll still be palindromic, and I won't have false.
I'm gonna keep
prophesied.
making up numbers until I can totally trick Jesse and not get him to predict.
Hallmark of a superstar.
All right. Thanks for listening, folks. If any of you are still listening, have a good one.